Yo, how y'all guys doing today? I'm tired right now, but we're gonna do another video anyway. So, I was just kind of sitting here and like playing Fortnite, and I was thinking like, yo, we need to talk about fair value gaps. Okay. Um, Now with a lot of my students when I mentor, and this is like one of the first ICT concepts that really was like near and dear to me when I first learned it. So it made me so hyper to teach you guys kind of like first, right? The biggest thing that we get into outside of this is really like obviously liquidity, okay? And the next video, I'll make sure that we cover, basic liquidity stuff. But I love this concept so much, I really couldn't wait to do it. So that's what we're gonna do today. For those who are just joining, right, or brand new to the concept, a fair value gap. Okay. If you've ever seen any of my charts or other people charts that might use the same concept, and it's very widely known. So, um, in terms of like ICT concepts, this was like the flagship pattern for so long, and I understood that when he taught it, I was like, oh, yo, this is crazy, because you could do so much with it, and it's so helpful, right? So either a fair value gap or FVG is what we call it, okay? Another term for it that you might see is, let me actually blow this up. Okay, let's blow this up a little bit. Fair value gap or an FVG is what we identify as an imbalance, okay? The market actually creates imbalances within the market. And I'll show you what that looks like. And the reason why we like these so much is because now you see I've been looking at this generic uptrend, right? That's why I have this little arrow here. Okay. A big thing, right? When you're looking at price action. Let me take this off the screen so you guys can really see. Okay. Before I point anything out, okay, is there anything that could help you figure out that price is no longer bearish and it's about to go upwards? Pause the video if you need to for a second. Just look and see if it's anything that catches your eye without me telling you first. Take like 30 seconds. You probably did not pause the video. But it's all good. It's all good. All right. So, a big thing in the market, right? Now, I purposely left it smack dab in the middle so you could kind of, your eyes will gravitate to it. But watch this. Do you see this huge candle right here? It's big as fuck, right? This is what we call an imbalance. Yes. A lot of people will sit there and be like, wow, well, it's just a really big candle. Well, I mean, I guess so. It's not just a really big candle. But the thing about fair value gaps, okay, this is how you want to spot it, all right? And this is a big thing because we have a lot of ground to cover in this video. I'm telling you that now. The thing about these imbalances, okay, big thing I want to start off with, it could be bullish or bearish, okay? You have buy side imbalances, you have sell side imbalances, okay? This being said, I want you to focus your eyes on the body of this candle. And notice I didn't say anything about what time frame I'm on yet, but let's talk about that. I'm actually on a weekly time frame, okay? For those who, I mean, you might not trade forex. I trade forex, stocks, and crypto, but we're going to look at examples from all three markets. But what I'm looking at right now is gold. Okay, gold on a weekly time frame. Now, really quick with this imbalance, what you're going to want to do, okay, you're going to find a candle with a really, really strong body, just like this. Okay. Now, before I actually give you the rest of how to use it, I want you to make sure you spot it correctly. A lot of people will actually slightly understand what fair value gaps look like, but they kind of aren't sure. But I want you to be really sure when you find these, okay? The first thing I'm going to want you to do is, do you see how this is a candle before that? There's a candle after that. I want you to understand fair value gaps are technically a 3-candle setup, okay? I'm actually going to take the top of this candle before it, stick me a little trend line, all right? Damn, I do have to go to the store for backwoods too. I'm thinking it's a whole pack right here, and it's really not. Like, the whole time y'all can hear me get distracted, I've been looking to see if this pack of backwoods is on the side of where I'm at, and it's not there. Anyway. Watch, I can see in the comments now, yo, he probably got ADHD or something. Nah, I'm just really, like, thinking about a lot at the same time. That's very important to me. Yes, backwards are very important to me. Anyway. And what did I just do? Right? So I mentioned fair value gaps are a 3-candle setup. You have this candle, the actual imbalance candle, right? Big body here. And you have the next candle next to it. Notice how on the side of my imbalance, there's nothing to my left, technically. And there's a lot of, obviously there's going to be space to my right. It's not painted yet. But really quickly, right? Before I point it out, is there anything that you notice happening within this area? And I mean, like, specifically that. Now give it a second. Light bulb gonna go off in a second, right? The thing about this, okay, buy side imbalances or sell side imbalances are actually one side of the market where basically all the liquidity that's delivered is one-sided. There's nothing but buying in here. This is not met with a downwards candle. At least not yet. But the thing about any imbalance that you see in the market, this candle is going to jam up too quickly. Price is actually not going to go significantly higher above an imbalance without this rebalancing. I want you to think about what I just said. Imbalances are technically gaps in the market. So you know how we talk about, even if you're a retail trader, they talk about gaps because you can physically, or I'll say visually, you can see a gap, right? A fair value gap, it's not a actual candle to candle space in between, but you want to treat it like one, okay? Now, notice this. Again, I'm on a weekly time frame. Before I switch the time frame, I want you to see this. Fair value gaps, okay? All of these things that I'm going to explain to you happen all in a row. This is the cool part about fair value gaps. You do not enter the market without a fair value gap. It is also a fractal concept. So that means the same thing I'm showing you on this weekly, you get find on an hour chart. You get find on a daily chart. You get find on a 1-minute chart. Okay? And I want you guys to get comfortable with that, because that's going to help me with some other stuff I want to explain to you later about deciding between swing trading, scalping, or day trading. Notice how when this candle jams up too quickly, it makes a purple candle right after that. and we kind of start to run back into this imbalance. And how I drew it correctly, right, to make sure you understand this, you're going to pay attention to the top of the previous candle and either the wick or the body of the candle next to it. That's where I'm getting these yellow lines from, okay? Or basically I'll say where I'm putting my yellow lines and know that they're going to be in accurately, okay? And I want you to notice something really specifically, all right? Notice how this fair value gap is very close to these relative equal lows right here, okay? And I mentioned, right, in the beginning, how do you know that something is done being bearish and it might be literally changing directions? This is why I love this, man. This is so much. This accomplishes. Look, I can't even talk. This accomplishes so much for you in one idea. Buy side imbalance. Price is now bullish. It's going to run up, create buy side liquidity here. Okay. Once you notice that your imbalance is created, you're going to understand this, that price needs to rebalance before going significantly higher. I took forever to tell you that, but this is all that we want to do. Okay. Now I'm going to give it to you again. This green candle jams up too quickly. Price is going to hover above. And watch when I switch time frames. Watch this. I'll get rid of this bottom one. See that? Now, check this out. Very cool, right? Now I'm on a daily chart. What did I say about what happens after a fair value gap is born? Now, I need to take all of these off so you can really see what I'm saying, okay? But if you paid attention to how a fair value gap is formed, now, fractal concept. Previous candle's wick or high. I'm drawing my trend line sideways, extending it. Same thing with the candle next to it. This wick right here is what I'm focused on. Okay. Now, look at that. On a daily chart, it's the same exact thing I just showed you on the weekly. And again, deciding what fair value gap to use, understanding what time frame you found it on is going to make a difference. Okay, it's going to be very significant. But the cool part about understanding this, right? What did I say? If price is going to go anywhere significantly upwards or downwards, price is going to use imbalances. Once these things are created, price cannot move significantly without a rebalance. So this whole down move here, I want you to understand it just like this. Do not think price is bearish. It's not. It's really not. Because when you see it like this, yes, price is coming downwards, but it's only coming to rebalance this fair value gap. This area here, and I mean specifically, we talked about the body of the imbalanced candle. That's how you can see it. And you're going to check the candles next to it to make sure it's going to be a valid fair value gap. Okay? I don't want you guys drawing it like this. A lot of people have trouble and do it like this. They say, okay, well, you know, I have this candle here and I have this one. Close but no cigar, okay? It's not going to be the last down close, whatever. It's not. It's literally the next candle. So even though this candle does what? Dips into your fair value gap. All it's doing is rebalancing. See that? Price jams up all the way up too quickly. It creates a high here for a second. Runs back down into the imbalance, right? Doesn't even go 50%. And does what? Runs significantly higher. Amazing. Now, just because I'm looking at this one on the weekly, I want to, again, it's going to be a long video, man. Stay focused, okay? What I normally do, I'll actually take a rectangle, draw my fair value gaps just like this, okay? How you participate here, all right? You're actually going to take your long position. When you see price run up above and the fair value gap is made, okay, you're actually going to place your long position, right here, and you're going to find either buy side liquidity, or I was going to say something else, but I'm not going to get to that yet. Find buy side liquidity. Let's focus on that first. Now, really quick, right? I'm going to ask you two questions. If the answer is, what is that? Oh no, somebody texted me. Okay. But I'm going to ask two questions. If these two questions are answered in a way that feels comfortable for you, I suggest you try fair value gaps, okay? And what I mean by that is, I'm not forcing you guys to try this. I'm not forcing you to believe what I'm saying. I just think that this is one of the greatest entry techniques, if not the best one ever created. Just because this is so easy to use, and there's a million different applications for it, and give you confluence at the same time, okay? Now, before I move on to our next example, let's talk about how to run this as an idea, right? This is clearly going to be a swing trade because this takes forever. Weekly chart, daily chart, I'm looking for swing trades, okay? Daily chart, 1 hour chart, the 4 hour chart down to the 1 hour chart. I'm using more for like intraday, you know, maybe a 1 day swing if I want to do something like that, but mostly looking intraday for the daily, 4 hour, and the 1 hour. And then anything under that is definitely going to be, you know, intraday or a scalp, right? But that being said, the actual structure of this is the same. What you want to do is, when price is hovering around here like this, wait till price hits this imbalance. Instantly start buying shit. Instantly. Now, for those who are, this takes a level of faith and confidence in your method and understanding how to draw your fair value gaps correctly, right? But what you can do is actually become a buyer the moment price is parallel to this entire candle. And what you're doing is, now if those who haven't heard of this before, we talk about what's called institutional order flow. Okay? Watch this. Do you see how when I go back to this daily, right? You guys remember the little fair value gap that I pointed out here? Notice how I can refine these. Okay? My first question I was going to ask you 2 minutes ago. Did my stop loss get close to hit? No. Not at all. Number two. Does your target get smacked? You have a nice run. Oh shit, I moved it. Oh shit, I moved it. You got a nice run right here, right? It does come down some. But what does it do? And yes, it does get to the point where you're going to find these things all over the place. Whoop, there you go again. You missed this entry down here. You're going to play this other fair value gap. That's another cool thing about fair value gaps. You're not limited to just one of them. These things happen every day, multiple time frames. Look at this. Is it exactly what I described to you before? Really look. Previous candle's wick. The next candle's wick. We have our huge body here. And look what happens when we rebalance every time. Now you want to make what? Higher lows. Or lower, or yeah, it makes higher lows. Right? Yep. And I don't really draw trend lines a lot. I really don't. Because I'm too busy drawing fair value gaps and turtle soup and liquidity and other way more important things than a freaking trend line. Okay? I don't need them. And you guys have been here. This is your third visit with me, right? I'm not using no value. I'm not about to use no indicator. I'm not doing it. I'm sorry, I'm not doing it. This is not my style. I don't want to. Price doesn't care about none of that. Okay? And look, right to your target. And before, I don't want to talk about liquidity right now, but you see how perfect this is. I say, hey, it's going to 2074. It went to 2074 and does what? We've been bearish ever since. You got to understand what price is likely to do. Okay? Now, my next example, I want to talk about some stock stuff. Okay? Now, for those who are also new to what I'm up to, I actually trade, again, forex, crypto, and options. So, a lot of times when I'm in my Discord and I'm sending out signals and things like that, I give you guys such simple price action to use. I ask my Discord a lot of times, so yeah, yo, do you guys want more swing trades, more, day trades? It's totally up to you guys. And I'll just give you whatever. They said they wanted more swing trades. I'm telling you, man, this is the type of stuff that we get into in the Discord. You don't have to run alone. Okay? And what I mean by that is, some of the stuff that I could teach you how to do is just incredible, man. And again, the accuracy on some of this stuff is fucking insane. So what we did, and again, I like the longer swings, obviously, but this is the type of stuff where people in my Discord can come in with 3, 4, and 500 and are coming out with 5, 6, and 7, and 10,000. It's crazy. This is how we're doing it. Okay? Now, you automatically notice off rip one thing about this fair value gap. You've been looking at it the moment I switched the chart. Another thing about fair value gaps, I'll tell you this. Do not mind if price kind of colors outside the lines. Okay? It's not really hurting you that badly. Because check this out, right? If I actually switch to a line chart, notice what happens. Price is still respecting this fair value gap. I'll tell you this, and I'm actually just really repeating myself because when I first heard this, and when ICT said it, I didn't really understand what he said by this. But now that I'm a little bit more experienced, I understand what he means. The algorithm does not give a fuck about wicks. It will use wicks, and we use wicks for certain things. But the algorithm does not care about a wick. The bodies of the candles is what you need to really be focused on. Like I said, it colors outside the line only with the wicks. Price action through the actual bodies respecting this fair value gap. You have the nice candle jamming up too quickly. It's only been the buy side that has been offered, so no sell side has been offered to you within this area. Once we come down, only to rebalance. Price is free to do what? Draw to the upside. And we get right above that, right? So fair value gap into what? Another fair value gap. And what I did was, hey, guys, okay, we have a nice weekly imbalance on AMD. I actually was watching it for about 2 to 3 weeks, okay? So above here at 83.50, I was watching it as price came down. I told everybody, do not start to interact with it until we get to about $80 and under. This week, when we got to around 77, that's when we ran AMD. And my target was $100 flat, okay? But guess what we did? Yeah, exactly. So, with liquidity, right? Notice how I got 103 to like 104 up to like 106 area, right? Does our fair value gap do its job? Let's check again. Line chart. Is this fair value gap respected? You tell me. And again, I know I smoke a lot of weed. I'm just that like a stoner kid on YouTube just telling you about some shit that I ended up learning, right? But I'm telling you, man, some of this stuff is so incredible. And it's clean. And it makes me comfortable. I have actually really bad anxiety. So when I'm actually on the chart, I need something to really sink my teeth into. I need something to grab onto. I need a rope. I'm not going to sit there and trade or risk my money in some random situation where I know price is not likely to do what I'm thinking it's going to do. I'm not into that. I've actually never gambled before, which is kind of weird. Then I'm thinking about that because, damn, I should probably go to the casino like tonight or tomorrow or something. But my point being, I don't like gambling. I like high probability situations. And the thing of why we like fair value gaps or imbalances, right? Buy side imbalance, sell side inefficiency. That's what it is. I'm giving you that last because people always think that's like the hold on, let me actually write it for you. They think it's rocket science, what I'm saying. Buy side imbalance, sell side inefficiency. Busy, okay? That's what we call a bullish imbalance. Now, the same idea can actually occur on, let's see. I wanted to find a bearish imbalance for you really quick, right? There you go. Same thing, but what? Upside down, right? Yes, give it a second. Look at it, right? You have the previous candle's wick, post candle's wick, imbalanced body of the candle, price trades, and where's my arrow? Price is going to trade down, come back, and look at this right here. What you're anticipating is price to straight fail. It's going to stop going that direction in this imbalance and straight run for liquidity after that. Does it? It sure does. Even though it doesn't take this low out, this is a good amount of money, man. This is a good amount of money in this swing trade. You feel what I'm saying? And you take your profits. And look. Check this out. Fair value gap. I'm telling you, man, it does not stop. I could point out 1 million of these things to you. 1 million. More importantly, right? Let's move on to our next example. But the thing about this, okay, and I want to show you something. Not only, now this is the flip side to a fair value gap, okay? What the fuck going on? I can't find Euro USD. Oh, there it is. Okay. Now, looking at the Euro, right? Oh, before I say anything, I want you guys to just appreciate this massive, massive fair value gap. Just appreciate this, okay? That's all I'm saying. Anyway, another really, really interesting thing you can do with fair value gaps, and I do this a lot. Watch this. So, I'm on a weekly chart, right? And the thing about a weekly chart is, again, it's really, really good for swing trading. That's what I meant to say, right? Another thing about fair value gaps is, I want to point this one out right here. Remember what I said earlier, and you're probably going to be like, well, every single fair value gap rebalances, right? I want to tell you something. And this is actually going to lead me into a second part to this video too. But I just want you to understand, right? The later application to when you really understand that fair value gaps are like magnets to the market. Okay? Really understand this. Price gravitates towards these things. This is what I'm showing you, a weekly imbalance, right, to my left. Okay. Notice that when this imbalance got created, and yes, it is a fair value gap, although it did not get rebalanced, okay? Don't get confused. The rebalancing does not make it a fair value gap. The fair value gap structure is what make it a clean imbalance. We just anticipate and know this has to rebalance. If it doesn't, you're going to look for this instead, okay? Notice that this is a weekly imbalance, so it's a higher time frame. And we trend down. Trend. That imbalance is long lost, right? That's what a lot of people will think. But check this out. We see how price obviously goes down and back up. But this is what I want you to do, okay? You're going to think about untagged fair value gap. So I actually will mark these on my screen. Untagged fair value gap, okay? So when these are trending down, I can see this over here that this was not rebalanced or whatever. You have to understand, ooh, that thing went away. All right. You have to understand that when price is now bullish, whatever made it come from down here back up, right? That's different. But when this is headed back upwards, if you see an untagged fair value gap on a higher time frame, 11 times out of 10, it's fucking aiming for that. I guarantee you. I guarantee you. Because look at this. You mean to tell me price went from point A. That's a little A. Like, come on now, man. Can you make it bigger? Yep. So it goes from point A all the way to point B, right? And look at that. It's perfect. Why do you think it stops directly in this untagged fair value gap? Why didn't it keep running? It's a magnet. It gravitated towards it, and price just stopped. Where's it going to go from here? I don't care. All I know is that from point A to this fair value gap, that entire structure was filled back in order to make it back to that imbalance. You're going to see evidence of this all day. All day. Now, one last example before we start to get kind of crazy, right? Let's look at Bitcoin. Now, before I say anything, please tell me you see that. Please. Give it to you one more time. Post candle. Wick. Top of the previous candle. Is that not a large imbalance or what, man? And again, next video, I want to talk more about selecting and avoiding of fair value gaps and how to pick the best ones. But for right now, I just want you to understand. I just want you to understand what you're looking for. Visually, I want you to see this. And again, if I start going crazy, a lot of my students know I'll be doing this. I will sit there and mark fair value gaps so intensely fast, you can't unsee it. They're everywhere. Fair value gap. Fair value gap. And look at this. Look at this. Perfect rebalance. Perfect rebalance. What do you think price is going to do from here? What do you think? Buy side liquidity was formed right here. This is a whole trade setup in itself. It's telling you directional bias. It's actually giving you a target. Right after your imbalance is formed, it's going to give you a premium entry so then you could target the target. All of these things in a row. You tell me, man, is that worth it for you? And again, look, we're on a weekly chart, man. This is amazing in terms of swing trading. This is literally excellence in swing trading. Now, let's go to really quick. I want you to see something. I had mentioned to you before, this is a fractal concept. You're going to be able to find this on smaller time frames. Now look, I'm on a 5-minute chart, okay? So I'm not trying to hear in the comments, no, I don't like fair value gaps. They only happen on the daily or whatever. I don't have that long to wait. Okay, go to a 5-minute chart. Go find it. And again, I'm switching it up for you. I gave you a bearish one, okay? Now, let's do the narrative one more time, just so you're clear with what I'm saying, all right? You have a huge displaced candle going downwards. And I even drew this kind of whack, right? Because you see how quickly I'll be doing it. What do we talk about? Previous candle's wick, right here. And believe me, guys, the wick or the actual body or the top of the body of the candle is totally fine. You don't have to be so specific. It does not matter. I don't want you guys to be like super OCD in the chart, like, oh, that's not a fair value gap because that's not a wick. Or, oh, that's not a fair value gap because that's not a wick. It's a fair value gap. Believe me. Okay? Damn, yo. All right, it's almost time for backwoods, so let's get these done. You're almost done, y'all. Hang in there. So now, with this fair value gap being formed, right? What do we talk about? Jams down too quickly. There's actually no buying in here. So, this is actually called a SIBI. Sell side imbalance, buy side inefficiency. Now remember, the bullish version is a BISI, buy side imbalance, sell side inefficiency. So we're really talking about, and I'm giving you, key terms. We are talking about imbalances, aka fair value gaps or FVG, which is commonly referred to as, again, sell side imbalance, buy side inefficiency. So with that being the case, price is going to run up and offer a chance to get back into this area. You want to be a seller. Do not try to buy this. Don't. And where's your stop loss at? You actually can keep your stop loss, like I normally do it myself, like a couple pips or points or whatever you want to call it, outside of the fair value gap. Because sometimes we talk about, coloring outside the lines, right? So sometimes it'll come up, smack your stop loss, and then literally drown down to your freaking target, just like that. And look at that. That's beyond significant, am I right? Because look, if I'm really only aiming for sell side liquidity, right? I get all of that. I get a lot of extra, a lot of bonus, right? I mean, there's more lows down here. I'm sure that we could have made our analysis and seen that, I'm sure. So again, your trade ends up looking like that, whatever. But really look at this though. Even if I'm drawing it after price is happening and you're watching me do it, it's not going to make any less sense to you, right? It's just like, yo, damn, this fair value gap really was responsible for sending price down. And look at that. Look at price delivery. Institutional bearish order flow. We'll talk more about that too. But I just want to, leave this in here for just like a second or two and go up the time frames on you, right? Because when you look at it, you see what I mean. Is that not an amazing trade or what? And granted, we're looking at DXY, but I'm saying, if you really want to operate in the market with a lot more finesse, you're going to also be a lot less scared when you see retracements. So when you see some of these rebalanced fair value gaps, you're thinking to yourself, okay, this is probably just an adjustment so it can go lower. And I'm going to aim for my next draw on liquidity. I'm telling you, man, this is going to help you avoid so much crap. And again, I'm not saying that fair value gaps, work insanely 110% of the time. Because again, you'll get into a situation where, watch this. For example, let's say you try to take this fair value gap. And also, I'm going to say this too. I'm going to make a second part of this video. Again, we need to talk about selecting and avoiding. There are fair value gaps to avoid, yes. If it's not placed in a certain way or formed in a certain way for you, you're going to want to avoid it. And we'll talk more about that. But the thing about it is, man, I'm telling you, you will find so much, not just success, but you're going to be so comfortable on the chart with this. 5-minute time frame, 15-minute time frame. It does not matter. You see what I mean? That same area, although it's refined to the 5, you can use the 15. Again, time frame specific. So I actually try to, when I'm giving signals, I'll say actually like 15 min fair value gap. So you know what I'm looking at. Okay. Remember, we actually saw it on the 5-minute first, but the 15 also creates another imbalance also. So sometimes they will overlap over the time frames, okay? Not always, but they can. All right? And from anybody, if you were paying attention to last 2 videos, what is that? Now, this is crazy. I want to combine something, right? Turtle soup to fair value gap. That just fucked it all up, didn't it? Yeah, we're going to start playing like that now. I'm telling you, man, on this channel, my goal is to like, and again, I'm not ICT. I'm not. I love all his concepts. I've learned majority of them. I'm really good with majority of them. I'm gonna teach you how to, at this point, I can mix and match concepts as I please. I can enter the market 15 different ways. I don't need a fair value gap. I don't need turtle soup. I can pick one. Sometimes, again, you don't have to, but it's on your comfort level. If I want to use a fair value gap today, then I will. If I want to use turtle soup tomorrow, then I will. If I want to use just liquidity-based stuff, I can do that. But again, giving you more superpowers in the market, man. I want you guys to be in a, oh, snap, hold up. I'm sorry. That just, again, it just never stops with fair value gaps. You feel me? Never stops. And again, they could be big, small, tall. Like, these things are incredible, man. You can find them all over the place. And so what happens is, you know, you get to my Discord and stuff. This is some of the signal, you know, that I'm giving out to you guys. And like I said, when you get to a situation where you know where something is going, I can day trade the same thing like 14 days in a row. If I'm on a weekly chart and I don't want to swing it, I will day trade every bullish fair value gap till I get there. That's exactly what I did with AMD, man. I had some swings running, and I was still day trading it when I seen fair value gaps just like this. Remember, I told you we ran it from $78. We got it back again right here, 84. And you see exactly where AMD went. Or actually, hold up, if I you know, have to, but if you go on your chart right now and tell me where AMD went, all right? Did it go over 103? You tell me. But my point, right? I want you guys to get really comfortable with fair value gaps, okay? Now, this is another, man, this signal was from a minute ago. This was from like May, I believe. But if you see like kind of down here-ish, like these are lower time frame fair value gaps that we took, right? And I targeted this huge imbalance that was clearly untagged. Did price fully fill that imbalance in? Yes, it did. This is what I mean to tell you. Fair value gaps, amazing for entry techniques. It's going to create a target for you. Then it's going to create your entry point. Then let you participate to another imbalance. They're magnets. They're magnets. How cool is that, man? I'm telling you. You see how excited I get over a simple concept. But again, we keeps it simple. It's very cool. You know? So, again, man, I really want you guys to get, you know, I'm not going to make this video too long, but some of the stuff that you can, again, like, play around with is so simple and easy. Even from just the little stuff that we talked about in 3 videos, you're a better trader than 95% of people out here. How crazy is that? I want you guys to really, you know, get comfortable. What the hell? What? Whatever. Y'all know I'll be on my iPad a lot, but I'm like, that's a weird icon I've never seen. Like, why is it there like that? Anyway, y'all know me. It's backwood time, so I will let you guys go. Come back for part 4, maybe even later today. If I don't run it today, then we'll run the next video tomorrow. But let's finish up for value gaps, and we'll start getting into how to plug this into some other time-based things, okay? Is there anything else I gotta tell you guys that I'm not remembering? I think that's it. Well, yeah, be safe, y'all. Love you.